Hi everyone. Today let's talk about Bitcoin. This video is going to be all about the technical analysis associated with Bitcoin, and I'm going to go through several different charts, starting with the weekly chart here on a logarithmic scale, and then I'll work my way down into the smaller time frames on a regular scale. If you like trading stocks and options and crypto, definitely like and subscribe. I make these videos as well as stock analysis videos and overall portfolio reviews every single week. So definitely hit the bell so you don't miss out on that future content. Welcome to the Portfolio Bulletin. Let's get started. So I want to start off here with the logarithmic scale for Bitcoin, and you can see up here this is the weekly chart on TradingView. Strongly suggest you try out TradingView if you're going to do any kind of charting. It's definitely the best that I've seen, as well as being free for most applications. You can go down here and change your scales, whether you're going to use regular, percentage, indices, or logarithmic. And anytime we have these huge moves in a stock, or I'm looking over extremely large time frames going back to 2015 here for Bitcoin, and I want to look out to 2025 here, I tend to use the logarithmic scale as it seems to make these charts much clearer to analyze. So you can see we had this long-term trend here started in 2015. We kind of rode up this trend line all the way through 2016, where we broke out to those highs of 2017, and were quickly rejected all the way back down to around $3,000 per coin. And then we generally rode this trend line all the way here until 2020, where we're seeing another pretty dramatic up move in Bitcoin. The blue line here is the 9 EMA, and the red line is the 30 WMA, which are the moving averages that I tend to trade off of the most. And when the blue line is above the red line, I'm bullish, and when the red line is above the blue line, I'm bearish. It's not going to give you the tops and the bottoms, but it will protect you from the main part of the move, and at the very least give you a generalized bias. So what I'm looking at here is I can see that we generally keep on this trend line, whether it's slightly above or slightly below. And anytime we get really far away here, we have a rejection, whether it's 1,000% like we saw in 2018, or just a few 100% like we saw in 2019. And then we're currently looking at around 100% off of that line right now. Of course, that doesn't mean that we're not going to see another pretty dramatic move, similar to what we saw in 2017 and 18, before we see another rejection back down to around this trend line in the future. But understand that this trend line is definitely in the up direction, and I am bullish on Bitcoin. You can see as well that the blue line here is well above the red line, meaning that I have that bullish bias, and I have a generalized price target here of around $100,000 at a minimum for this move. I certainly think it could go higher than that, but I don't think we're going to stop before we hit that point on this particular move. And then at some point here, we'll see a rejection back down to this lower level. In my opinion, we'll generally continue whether above or below this trend line before we see another move higher sometime in 2023, where we get another leg up somewhere into 2024. At least that is my current thesis for Bitcoin on the very long-term scale. I also think it's valuable to see exactly how big these moves are. So you can see here, this is a massive move of around 1,400%. It took around 38 weeks to fully execute. And then we saw a similar move here of down 76%, and it took 58 weeks to do that. So using a similar metric here, we are currently around 400% off our last move. And if we take it up to that very large move of 1,400%, that would give us a price target of around $170,000. I would say this is not extremely likely because that was a very large move, and I don't necessarily think we're going to see this kind of move again, but it's not impossible. We could see a huge move up to this extremely high level, but I do think we'll see a retrace back down to this lower trend line where we would potentially see a continuation here and then another strong up move. Moving over into the daily chart, I have a standard pitchfork built here. This is just another tool that's on TradingView that I find pretty useful. You can see based on this analysis, we're currently right in the middle of this trend, and we're sitting on top of that center line, which I would expect to be some support for a stronger move higher. Looks like we got a little bit overextended here in terms of distance between the 9 EMA and 30 WMA, but that certainly doesn't mean that this can't continue. As we saw back in February of 2001, we saw a similar opening here where we were getting some strong separation. We saw a small retrace here on February 7th. Which then indicated a stronger move higher up to the highest level of that pitchfork, which if we saw another move like that again, we would potentially be looking at another 20% move higher or a price target of around $75,000. Otherwise, pretty straightforward, similar to the weekly trend, still in a very strong uptrend, suggesting much higher prices going forward. So understanding that we have a very strong bull trend on the weekly and the daily charts currently, it's worth taking a look at some of these lower time frames. So this is the 4-hour chart here. You can see we still have this pitchfork that I built before. And I also added a price level here at around $60,000. We had some price resistance when we came into this level, and we rejected off that level. Came back in, had some further rejections, tried again, didn't break through. And then we came in, definitely had some consolidation prior to the move higher, and then we broke through that level, creating new highs. And then if we really zoom in here, you can see we're starting to see a little bit of a retrace where the 9 EMA is getting closer to that 30 WMA. Of course, this does not mean that we're going to see a breakdown here. We saw a similar price action prior to this leg higher, where the moving averages got a little bit tighter prior to the acceleration upwards. Of course, you never know for sure because as you can see here in March, they got pretty close together and then we broke through that level. And this is what I would call a gradual coming together, which in my opinion, we tend to see a breakthrough, which was the case here. We saw a leg lower, got a crossover here. So this could have been a fake out, but we didn't see a break of these highs here. So that would indicate a lower high from this previous high. And then we came down here and made a lower low off of this previous low. So really where you would be getting trapped here is on this lower high. Based on trend analysis, you got a lower high, a lower low, and then another lower high where we saw some price rejection, but we didn't see that leg lower. And this could have been a position where I would potentially lose a little bit of money, expecting this trend to continue downward. But there is potential that I wouldn't take this trade because you do have some countervailing signals because the blue line here, the EMA, is above the 30 WMA, indicating a potential change to a bullish trend. And then sure enough, as this came closer together, we got a breakthrough. We came back and retested this middle line. We are now breaking down further. Still potentially support here at the $6,000 support level that we've established over the last month. But there's certainly potential we could see lower prices, even down to this next support level, somewhere around $58,000 per coin. I do want to mention here on the 4-hour chart, before going to the lower charts, that this is the time frame that is used most often in swing trading, in my opinion. It helps to negate some of these shorter term crossovers and give you some longer term trends. So you can see here we have this initial crossover here, and that gives you a pretty strong move of around 70%. Of course, you wouldn't be exiting here at the highs until you start to see this pretty sharp move. You get the crossover somewhere around here between 50 and 60%, at which point you would be looking to enter short, or at the very least sitting out the downward move, which is around 20% from that crossover. And then if you entered here, get a little bit of a fake out, could get somewhere around 10%, but if you wait for this crossover here, you would be looking at around 5%. And then again, here you would be looking at a long trade, somewhere around 25%. You get a little bit of sideways consolidation before a continuation down. But really, this 4-hour chart is going to give you a much better idea of shorter term price action and the direction that you should be trading if you're looking to swing trade. Now going down to the hourly chart, this is really as low as I would go if you are a long-term buyer. You don't really want to be concerned about these shorter term crossovers where you're seeing some downward price action, as we're going to see much more significant numbers of crossovers on these lower time frames. Now they can certainly be beneficial. You're seeing moves here of around 5%. And then we get another crossover here, which gives you another move of around 7%. Of course, you're going to have your fake outs here. So if you sold at this crossover here, you could potentially buy around 2% lower, but then you got a pretty quick rejection and some consolidation before another leg higher. If you're trading this chart, these moves only tend to last a few days, which makes sense because this move started here on April 12th. And then we got another crossover here on April 14th. And now we're seeing a couple days of downward price action. This is really for much shorter term traders and not the longer term buy and holders, or at the very least, the longer term swing traders. Sometimes it's beneficial to look at this chart just to try to time some entries where you can see this crossover happening a little bit sooner at this lower level, indicating a much longer bull trend, or a crossover here indicating a much longer bear trend. But again, this takes much more time and energy to time these entries and exits, as these crossovers are going to be much more significant. And in my opinion, you get more fake outs on this time frame than you do the 4-hour, the daily, or definitely the weekly. Going down even further here to the 15-minute chart, really you should only look at this if you are making day trades, not trying to buy and hold, as you're really just wasting your time trying to trade these shorter term time frames. Like I mentioned, they can be beneficial for very short term moves, but in my opinion, not beneficial if you're planning to hold for any amount of time longer than a week, and certainly not a few months. Let me know in the comments section what you think of my current thesis on Bitcoin. I didn't talk about the fundamentals at all. This video was obviously focused on the technical analysis, as it's a continuation of my technical analysis videos from the last Tesla video, which you should definitely check out if you haven't seen. Definitely like and subscribe if you got any value out of this video. As I mentioned, I make videos like this, as well as videos around stocks and my overall portfolio every single week. So definitely hit the bell so you don't miss out on that content. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.